Okay, today is 16th of October 2025, and I'm gonna do my trade recap and a little bit of charting session, which I'm gonna talk about. We will also talk about how the previous cycles are very important as we discussed in the previous lecture. So today is 16. Today was a losing day, minus 190. My bias was bearish. Um, October 16, I was mostly neutral, but at the last trade, it was a greedy trade, which I noticed down over there. My target and point of interest was relative equal lows. It was a losing day. My idea for the day was bearish. It was right, but the time was not. I should start looking at the 4 hour and the daily chart as well and stop at two trades, which is the main lesson. So I want to talk about how I looked at the charts. So I was bearish right off the bat when I came to the charts around here. And there were relative equal lows over here, as you can see here. I wanted to wait for an ideal scenario where we will take out this high over the relative equal highs over here. I'll show you in a bit. So we took out this high. This is the point where I wanted to short, but we did not actually go down. We went down in the next candle, and in the next candle we fully went down. So I entered after the NQ edged me twice, taking out buy side twice. And I left the charts because I was up on the day, but the third trade put me in a loss. The third trade was out of greed, and the good thing is that I closed the charts instantly after that. So that's a good show of restraint. I'm proud that I can control the greed. You should always write good stuff about yourself when you are journaling, because that will encourage you to trade better the next day. And good thing I noticed that my analysis is kind of 100% right. I just a little bit more patient to wait for the right setup, because whenever I'm looking at the charts, my analysis is right off the bat is always correct. I've noticed that, and I think that has come from experience on the charts and with learning the right analysis techniques, which is the ICT, obviously. So the only thing that I have to improve on is when to enter the setup and when to wait for the right setup. So on the hourly chart, as you can see, we have this hourly mitigation block, which was where I was anticipating a reversal, but I could have seen a reversal here as well, because we were already in an hourly fair value gap. But as you can see, we did not. We reversed back, went into that mitigation block, making a daily SMT with ES and a 90-minute SMT with YM, and then we dumped down over here. This low was an engineered low because it stopped right before these two lows, and then we dumped. This is the 1 minute chart I was looking at. As you can see here, we took out the relative equal highs, which was a good point to short, which I did, and then it went up against me. And then this was another good point to short, where we were in this fair value gap is called a reclaimed fair value gap, which is CB, inverse CB, CB again. And this is my execution. My first execution was from this fair value gap. I was anticipating that we might retrace a little bit into this fair value gap, which was not yet tapped into, and then we might reverse. So I put my stop loss above this high and my sell order over here, but we got stopped out instantly. The next thing I did was I entered over here on these green candles. I took one partial over here, which was around 500 no, yeah, $500, and I left a runner for here, but it went down and gave me a loss of, I think, $400. So it was like $100 in profit. Then I waited a little bit until 10:10, and then on this I entered again when we made this big down candle over here, and it gave me a loss of almost 390. So that's why I'm minus 190 on the day. But let's look at the chart now. So for study purpose only, I did the replay button so that I can show you my executions, because when the day ends they remove the executions on trade await. My first trade, let's go down to 15 second. So you would see that I entered on this candle and I got exited on the same candle. The second trade I entered over here and I took one profit over here. I don't know what's showing this here. Oh yeah, okay, here. One profit over here, and then I got stopped out over here in loss. Then I entered over here and then stopped out over here. So this was what was happening. But look at this. We actually went up again one more time, taking out this high and then dumped finally towards the relative equal lows over here. These are the lows that I saw. Okay, so the reason for making this lecture at the moment is that it's really important for you to see how the previous session works. If you look at it here at 8:30, the candle opens, takes out the previous session low. This is the previous 90-minute cycle, right? And then instantly bumps up and takes out the previous session high. This could be a trade for you guys. Enter here and take out here. The next thing that happened is I told you that price moves in the same way, even if it's 1 year, 1 month, 1 day, 1 week, 90 minutes, 30 minutes, 10 minutes, 1 minute, right? The price moves in the same way. So here you see is a 30-minute cycle. This is a 30-minute cycle. This is green box is a 30-minute cycle. Let me remove these guys. What you would see is as soon as the next 30-minute cycle opened, it took out the previous cycle low and instantly went up, took out these highs. We could have entered right over here. If we were only playing off the sessions, we could have done that. It would be easy. Now, look at this. This is a purge and revert. Look at this. When we took these highs, it's an instant purge and revert from that cycle as well. We took out this high and then reverted back. Now, good thing to notice about here is that when this cycle opened, it was the 10-minute cycle that opened. We took out that, and then in the next cycle opens and takes out the previous cycle low again and goes up and takes the previous cycle high. If you were playing just based on cycles, this would be an amazing day. We take that out and then go down, take it out again. But this time we do not go up, we only retrace back. Okay. And finally, when the next session opens, we take the previous session low over here. 90-minute cycle. We take out the low of the 90-minute cycle. And then what is our target? The high of the cycle, which we do. We finally reach out over here. And now at this point, we are in the mitigation block, which is a point of interest for us because we can see a reversal on that. Now we have taken out the important highs. We have a daily SMT, a 90-minute SMT. We can anticipate a reversal towards what? The low of that cycle. And obviously, because it's just before the relative equal lows, so we can target these low. And as you can see, we just dumped instantly after that. We could have entered anywhere between this time 10:45 to 11:15, which would have been a beautiful trade. This is trash if you don't know about time cycles, which I mentioned in the morning. I was not trading time cycles, so I was trading the relative equal lows. But this has made me realize that whenever a cycle opens and instantly takes out or takes out after some time the previous cycle lows, it should probably go towards the previous cycle high, or vice versa, you know, because you can see that all over here. We take out previous cycle low, go towards the high, we consolidate, take out the high, consolidate, 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 consolidate. Also, you'll notice that whenever there is a delivery like this, like it's very slow grind up, you'll see a fast delivery down next, because this is a low resistance liquidity run and this is a high, oh sorry, this is a high resistance liquidity run and this is a low resistance liquidity run. This was so slow, this is so fast. This is what we should look for. But anyway, that's it for today, and I journal it. Let's see what happened on Friday.